Yeah, the cottage industry is pretty interesting.
It's raining on us, dude. It's raining on us.
I mean,
Cam, what do we need to do here? My buddy Troy Gandee's coming on today, and he's somebody I met about 18 months ago in Charleston. He runs a local real estate investors association called REI Central. He owns a brokerage. He invests. He's a limited partner and passive investor in a couple of projects, not of mine, but of other people's. And he just joined Legacy Family, my mastermind. So I was like, dude, we got to sit down. He's a really, really sharp guy. He's got a lot of really good stuff going on and a lot of great insights, a lot of wisdom to what's going on in the marketplace in a super hot market. So if you are in a really, really hot market and you're like, how do I find deals? How do I structure this? Is this the new normal? We're going to dive into a lot of that stuff during this conversation. So hope you love it. Come meet my boy Troy. Troy, what's up, buddy?
what's up, bud?
Appreciate you being here, man. Yeah. Yo, so we've known each other for, I don't know, about a year and a half now, right? We got connected back at the REI Central event, probably when I came and spoke about right before COVID hit, actually.
Yeah, it was an early one.
Yeah.
Yeah.
And we got a bunch of mutual friends, Kelly Garrett, Dusty Keefe, and some other local investors and stuff around town. So, like, dude, tell me a little bit about what you got going on. I know you just joined the mastermind. I'm excited to have you in part of that. You got some good stuff business-wise going on. You got the brokerage with 15, 20 agents in there. I know we were talking offline about the market and how crazy that is. I'd love to kind of dive deeper into some of that stuff. How you're growing the brokerage, how you're, navigating the booming of the market, both as a broker and as an investor, and kind of, I know I was just kind of spitballing some stuff. What would you do with $1 million here, $2 million there? So, like, let's just wrap, dude.
Yeah.
Let's see how it goes.
Sure.
So tell me about business and give me a quick highlight on your story about, when you graduated from College of Charleston over here and how you got into real estate.
Yeah, sure, man. So I grew up in West Virginia. Pretty average upbringing and education, circumstances, all that stuff. But that area, probably similarly to where you grew up too, not the best economically and opportunity-wise, but kind of fortunately.
Rust Belt kind of thing,
yeah,
right?
Absolutely. Like Southern Appalachia, coal, timber, really no industry with that stuff anymore. But my mom lost a job there, which was like the best thing that ever happened to us. And she moved here and had me come along with her. So at the time I hated it because I was like a senior in high school. It was awful and traumatic, but it was the best thing that ever happened to me. And then I went to College of Charleston, studied philosophy.
Dude, isn't that amazing how, like, you in the circumstance, you think it's the worst thing ever.
Yeah.
And you realize that a lot of these setbacks are really setups for way, way better things in our life, you know? So I think, if you got bad things happening to you, you got to step back and look at the full scope and look at the full picture and realize that there's opportunity in every obstacle.
Yeah,
you know what
absolutely. I mean, at the time too, because it was my senior year in high school.
Yeah.
Thought it was awful, the worst thing
sucks.
ever. When I go home now though and see friends, they tell me, they're like, "You're so lucky you got out." Like, they've told me that they think I'm the most successful in our graduating class, which is just crazy because I barely graduated high school.
Yeah.
I mean, I was truant, terrible kid. So we came here, went to College of Charleston, which I just kind of got lucky getting in there. But then I graduated kind of at the end of the recession. So a lot of my friends were they were just extending college because there were no jobs.
Yeah, I remember.
So, they were going to law school, they were going to get masters, all these different things just to continue with some momentum, even though they weren't probably going to really make any money off of it. So I saw a lot of that happening because some of my friends were older, and I was just like, man, I don't want to get in that debt vacuum. I'm just not going to do it. And a family friend told me I should sell real estate. She worked for a brokerage over on Sullivan's, Sand Dollar Real Estate Group. You've probably seen their sign. Little boutique place, and I met with the broker, and he was like, yeah, if you get your license, you can, surely you can hang it here.
Did you want to be a broker? Did you want to invest, or you just wanted to be involved in something that wasn't the white collar standard approach to going to get a high paying job?
Well, I didn't think I could get that high paying job. I kind of always knew I was going to do my own thing because I've worked since I was like 14. Like I really barely got out of high school, barely got into college. Not for lack of ability, but just for like you know, just circumstantial. Just made the wrong decisions when I was a kid. I got into college because I took a placement test with a technical school, and got into the technical school and did a year school there, and then transferred into a real school because I never took my SATs or my ACTs or anything. So kind of always figuring out, like,
that's a good
saved a lot of money.
Yeah, it's a good little trick.
Yeah,
I like that.
Yeah, it worked out pretty well.
Resourceful, man. I like that. Yeah.
So that, you know, I never really had, a lot of it too is like where I grew up. I never had ambitions to go work on Wall Street. That wasn't really like in the deck. But I did fortune builders, actually. So I'd started learning a little bit about investment. That was sort of my like graduate school. I borrowed that from my mom and paid her back over time to do that. And around the same time decided to get my license too, that I would have them as an accessory to one another. And then didn't have the capital, so the brokering happened first.
Do you think, I get this all the time, man, do you think it's important for somebody to have a license to be able to invest? Or do you think they can invest without a license just fine?
I think it depends what stage you're entering the game. For me, it was really helpful because I was really young. I knew nothing about money, nothing about business, like at all. So for me, it was nice because I kind of got a really quick crash course on contract law, all that kind of stuff, like tenancy, all those things you learn when you're getting your license. So if you're young and you don't have the capital to sort of enter it at a higher level, so a lot of people will sell a business or they will cash something out and then they can enter it.
And they already understand the underlying principles of business, right? And so they can just take that and spill it into real estate. You know, like today, I'm like, I wouldn't say anti getting your license, but I just think it puts a lot of restrictions on you. Once you know what you're doing, you don't need that whatsoever. But I think it's also, like, I got my real estate license in New York and I had my real estate license in Ohio, right? So like there's definitely benefits to getting that information. Can you get the information and not get licensed? Yes, but you don't even really know what questions to ask, you know, or what to search or what to learn necessarily. You can go take the classes and just never take the test, I guess. But I think there's definitely, it would be hypocritical of me to say don't go and get your license in order to go and invest. But I truly believe if you want to be a real estate investor, you don't necessarily need a license by any means. But it definitely opens up some doors and it puts you into a world of meeting people who are in the real estate industry, access to resources like the MLS and data and places where you can extract information to go into source deals. But once you learn that stuff, I don't think you need it any longer. But yeah, I think it's definitely... dude, it's a tool in the tool belt, right?
It is.
I don't think it can hurt you.
If you want to focus on large multifamily or commercial, don't even get it. It's way too complicated to try to broker those. Like if you just got licensed to try to move, that's so difficult. If you want to flip, like Ruby, for example, if you want to flip 20 houses a year, it could be helpful to have it for the access. And because you'll save, you know, it's a significant amount when you're selling a $100,000 house to have that 2.5–3% commission that you can use somewhere if you had to. I think it just depends on what you're doing. For me, it was really helpful because I was basically college age. So making a $2,000 or $3,000 commission every couple months, I mean, that's like what kept my bills paid. You know?
And I think that's the way that you generated revenue, so that way you can go and invest. I think from a standpoint of, hey, do I want to get my real estate license just so I can save money or earn a commission on commercial? First of all, the buyer's agent or the buyer is paying the buyer's agent fee. So like, don't even think that you're going to get paid by the seller of an apartment building because they're going to tell you to go and, you know, kick rocks. So you're not going to get paid by that. So it doesn't really make sense to get licensed in order to go and, you know, earn a commission on the stuff that you're buying. And by the way, you don't need it because you can just take an acquisition fee if you wanted to. And on the side that you're selling, I think it depends. Like if I think early on it makes a lot of sense because you can save a lot of money by brokering your own stuff. I think eventually it gets to a point where you realize though that like, hey, is this the highest and best use of my time? Maybe it is. Maybe you really love the selling of your you know, retail flips, or you love selling your properties, and that's really what drives you. Or maybe you're like, hey, maybe it makes sense for me to pay a 2.5–3% commission to somebody else, or refer it off to somebody on my team or whatever, and me go focus on the next deal. I just think I know some people, they just get in the zone, dude, of I need to be I need to be licensed for this or that. And you know, sometimes again, take a step back, look at what makes the most sense. Where do you like spending your time? What's the highest and best use of your time?
That's it.
But I think it definitely is a benefit early on for sure, though.
I think, and you're right. It's when your business has not gotten to a point where you can afford to step out, sure, that's fine. But when you get to a point where it is not the best use of your time to be scheduling showings and things like that, like
it just consumes a lot of time.
Yeah,
you know.
Yeah, it really does.
And when you're good at going and structuring deals and raising money, and you have those other skill sets that develop over time, typically that's a better or higher return on your time than doing transaction coordination.
That's the goal too, though, is like, do whatever you got to do as you build your business.
But it's stepping stones, right?
Yeah, until you get to that higher level, that executive functionality, that 80-20 stuff where you don't have to go open doors and schedule termite inspections. Like, yeah, totally. It's just sort of part of the life cycle, I guess, of real estate.
I like that. So you got licensed, built up the broker, or put your license with that brokerage. When did you decide you want to become your own broker?
As soon as I could, honestly. I loved that company that I was with, but I got, in South Carolina, you have to be licensed for 3 years, and then you can take your broker's test, and do all that stuff. Once all that's done and passed, then you can upgrade it to a broker-in-charge license.
So you can become a broker, but you have to be with another broker in charge?
Yeah, you can have your broker's license. It's different in a lot of states too. So they've changed the law a little bit now, but you can be a licensed broker, but you can't be a broker in charge until you pay to upgrade your license at that point. So the main reason I did it was just to have my own little shop where I would have no, hindrance at all. I could do whatever, because a lot of companies are weird about investing. They see it as a lot of liability. You still have to pay a huge cut back to the company, all that kind of stuff. And I'd been doing that for years.
And a lot of investors, like, you learn about the wholesaling stuff online, and it's not really inside the lines of the state regulations and the board of the division of real estate and the board of real estate, and like it's seen as kind of like these wild cowboys coming in and just creating liability for the brokerage.
Yeah, and at that time I was assigning a lot, so I would sometimes have to pay a fee or a percentage to the company I was with, which I don't blame them for doing that now that I'm a broker in charge, because there's a lot of liability.
No, for sure.
But I set up my own shop and just did my own stuff, and it was great. And then and at that point I was very involved really with our local investing community. So I had people start to come to me to say, can I come work at your company because you're an investor, you can kind of help mentor me.
You get it.
Yeah, absolutely. And it's just been a snowball. That was 3 years ago that we opened the company, and the first year I think I had literally one agent, and we have 18 agents now in the company. And people
all very investment friendly, right?
Yeah.
Investment focused.
Yeah, they're all investors themselves. Some do hardly any sales. They might just buy or sell one or two of their own properties. And then some of us are top producers and are in the top 2 to 10% of agents in the MLS area in Charleston. So it's a really broad range.
What are you seeing? We were talking offline, like, because there's like, how many agents are in Charleston? Do you know?
It's crazy. It's like 8,000.
8,000 agents, like, and how many single family homes are on the market right now?
Less than 1,000.
Less than 1,000.
Yep.
So that means at best 1 in 8 agents has one listing right now.
Yeah,
at best.
And I mean, it's kind of been that way for years here. It's too easy, in my opinion, to get your license, and it's too cheap. So a lot of people will get it thinking like, I'm going to be out on the boat closing deals. And like, no, you're going to be under houses and in attics, and you're going to be getting yelled at by buyers and sellers. It's not as romantic as it seems. For some people it is, but for most folks it's not. And I think the statistic has always been that less than half of new agents renew the following cycle because they don't sell anything.
How long is the cycle?
It's a 2-year renewal cycle. So every 2 years you have to pay. It's not a lot, but you have to do your continuing ed and then pay. And I think a lot of people they're like, it cost me $1,000 or whatever, and office fees if you're with a big company, and they haven't sold anything, so they just let it go. Well,
I think a lot of people, they think, hey, let me jump into real estate because it's so easy to sell real estate right now. Yeah, it's easy to sell. It's very hard to find. It's like they need to understand there's two sides of that coin. You got to go and get the listing, and then you got to sell it. And so the selling's happening on its own, but sourcing the deals is another animal. It takes a lot of legwork and a lot of calories you got to burn in order to source those deals.
It's the same thing as buying a good deal. It's like if you get a good deal, you can get it financed. It's not hard to find the money for it, especially right now. There's tons of money in the world right now. There just aren't any deals to put the money towards.
It's amazing, man, because like right when you got into real estate, I was only in real estate for a couple years, but it was like, you got started in 2012?
About,
Yeah.
I graduated in 2012. out of college in 2012, so probably 2013 was when I really started doing.
And I bought my first place in 09, and dude, it was just like, it was completely opposite of what this market is.
Yeah.
Completely opposite. Deals everywhere, money nowhere,
yeah,
right?
I know.
And so now there's money everywhere, deals nowhere. And just seeing how much things change in a decade of just completely turned upside down, it's wild to me. Do you think, and dude, I remember how cheap houses were back then. I was like, dude, this is like, I'm new to this stuff, but this is just, I can tell this is a deal, right? And prices have inflated significantly over the past 10 years in Charleston. And I know this is like very indicative of many other markets: Tampa, Florida, Miami, Florida, Jacksonville, all over Florida, all over Texas, all over, Arizona, Vegas. Like, a lot of these different markets are seeing the same thing that Charleston's seeing right now. But like, prices are just going like this, and they're 3, 4, 5 times what they were 10 years ago.
Yeah.
And you're like, how is this even sustainable? Is it possible that this is going to maintain? Is this overheated? Is it too inflated of a market, or is it the new normal? What do you think?
It can't be the new normal. I just don't see how people could afford it forever. There's, this kind of unmitigated appreciation is problematic. One thing that's interesting too, I forgot to say this to you earlier, but I read something the other day about this is going to be an event that creates generational wealth this last year. So people that may have bought, especially young people, first-time buyers that had bought a property before 2020 and 2021, and then the people who had to wait till during all this stuff and after, it's going to be really interesting, because some people are being stretched so thin to buy a property now. Other people bought a house 2 years ago and have already sold it and made $100,000-$300,000 on it, and then they're going to have those funds they can put into other things. I'm telling a lot of my friends and clients in the past, I'm like, this is like a once in a generation opportunity to pocket a couple $100,000 on anything you may have this kind of equity in, and you can either hang on to or remove it.
But what do those people do? Then they got to go buy in the same market, or are you telling them to rent? Do you think the market will cool off, or like? I'm
telling them to rent until something happens. That's what I think is the most wise fiscally to do for those people. I mean, you're in a lot of, at some point that equity, I think, is going to evaporate when there is a plateau or there's some sort of a correction. We're going to have a correction of some kind. I don't think it's going to be catastrophic. We've had a net.
There's so much money, dude. As soon as prices drop by 10%, it's going to be coming out of the woodwork, reinvested, and it's going to bump values back up.
And we've been netting 40 or 50 people a day in Charleston for like 4 or 5 years. So one of our biggest issues is our sprawl. We can't sprawl like a lot of other places because we have the coast, we got water like we do here, and then we have rivers everywhere. Now you're seeing it start to catch up with like Nexton, Monk's Corner, the Ridgeville, Harleyville areas, all those up 26 are starting to grow. And that's why I think the tertiary markets like the Orangeburgs, the Florences, places like that are going to see growth because of telework, and people are getting priced out. I mean,
I think that the telework thing makes a lot of sense. I think there's a lot of amazingly undervalued markets. Obviously, Charleston is like going crazy, and Savannah's going crazy, but I think, dude, all of North Carolina, South Carolina, coastal Georgia, all the way down to like Jacksonville, dude, I think there's some real plays in some of these smaller towns around that coastline, because you're easily accessible to the water, you're easily travel to the main cities. You got the boating, you got the beaches, you got the history still, and it's just more of a small town without the big price tag. And I think definitely a lot of those smaller markets are going to pop, especially because you can work remotely.
Well,
I mean, you can have a lifestyle.
And our affordable house benchmark here in the Charleston metro area used to be 200. A couple years later, it was 250. Now it's over 300,000.
Wow.
For the South, that is a lot of money. When wages have been stagnant. I mean, Charleston's crazy. For there to be so much money and the prices be what they are, the wages have been extremely stagnant for a really long time here. So that's why I think it's somewhat unsustainable. You see neighborhoods like where I live in Park Circle change almost overnight. Like one day I walked outside and everybody had a golf cart. And it's like, this is crazy. It's like happening in front of your eyes. We're in a pool club there.
When 10 years before, instead of golf carts, they had Kevlar vests.
Literally.
Right?
I mean, it was totally different. Like, there's a swimming pool club there that we're members of for our kid.
Yeah.
And we've seen just since we've been members, the capacity. It's crazy because there's so much more dispensable income that's coming to that neighborhood.
Yep.
Those people are able to afford to join things like that. So you're seeing a lot more money in different neighborhoods like that.
It's you know, I think, I mean, you've heard of like the K growth curve or the K recovery curve or whatever it is. So essentially, you know, you got the axis of the recovery, and there's some markets that are just crushing it, and there's other ones that are getting crushed.
Yeah.
And I think there's definitely microcosms in the Northeast and the Pacific coastline, and really, you know, the blue states a lot of times that people are moving away from. They're usually more expensive, and it's usually up in the north somewhere, and they're moving down south. And I think the South and a lot of the markets in the South are having huge booms, huge recovery, or huge growth, and a lot of those northern markets are going to get hit hard. I haven't really seen, I tool around with like pricing in New York City and stuff, and it's, you know, I see some of the statistics like rents have dropped by 25% or something like that, and but I'm not really seeing it much in the pricing, but I also haven't looked in like 2 or 3 months. But it'll be interesting. I think it is more of a normalcy in the values here now. But I agree. Like how do values continue to increase by $10,000 a month? A month.
Yeah.
You know?
I mean, they go up. Normally we have about an 8% appreciation stagger. Yeah, here annually, which that's pretty easy to keep up with. That's not too bad.
Yep.
For an area like this, it's, you know,
where there's job growth and there's retirement people coming and like there's.
We have a great city. The economy is phenomenal here. It's just crazy.
Yep.
We have a lot of huge manufacturers and some that even want to grow. Like Boeing's talking about bringing their whole operation here at some point from the West Coast. I think they even just recently leased out a big portion of their facility out west so that they can start their transition here at some point. Yeah. So that 8% growth is
it's not just Boeing, right? It's all the ancillary businesses that do business with Boeing. The people who make the carpet for the airplanes, the people who do the seat coverings for the airplanes, the people who, you know, whatever, put the nuts and bolts and sell them to Boeing, right? Like there's a lot of different other businesses that will come just to support.
The cottage industry is pretty interesting. This is pretty unmitigated though, in my opinion, these skips in value. So a good example is a new build in Somerville I'm helping a guy with. Got it under contract for like $280 in November. It was it hadn't come out of the ground yet. They've had significant construction delays on it. It's probably not going to close now till August. It's already appreciated $80,000 and hasn't even bought it yet. Everyone in that neighborhood's experiencing that.
That's wild.
That got in early, and a lot of the builders won't even pre-sell anymore.
Yeah.
Because they're leaving money on the table.
Yeah.
That's kind of scary to me.
Yep. I mean, dude, that's how a lot of people lost their ass in the last market cycle too. Because I remember a lot of that going on. It's all speculation. People would contract a house and then let it get built, and then they'd sell it for a premium as soon as it was built. But dude, I think that's so speculative. That's so, there's too much downside risk, or too much risk to doing that.
Yeah, I agree. And I've seen I talked to some of my newer investor friends who have just started flipping, and they're like, oh, I'm really nervous that this flip's been on market for 2 weeks and it's not sold yet. They're like, something's wrong when that's like a legitimate concern.
That's wild.
Because it used to be like
different world.
If you got out of something in 6 months, a few years ago,
if you sell it, like I expected it to be on the market for 90 days, right, in order to get the top dollar for the deal.
And that's like, those are like your best case scenario numbers. Sometimes you're like, if I could sell in 90 days, this is my pro forma. You get to 90 and maybe you don't do that, but it's just nuts. I'm glad that this is what the economy has done. When everything first happened, COVID-wise last year, I went ahead and got my EIDL loans, my PPP funds. I was like, oh no, here it comes. We're about to have a recession. And the bulk of my income is sales from the brokerage. And that almost all gets translated into investing, but that's still in that phase of acquisition, and then I'll restructure it later. So I don't have enough passive income from that yet to completely stop working. That's the goal really. But it went the other way. I mean, it's
wild, right?
Took off.
Everybody thought that it was, because everybody was talking about a recession coming since 2017. It's going to happen. It's going to happen. It's going to happen. And then every year it just heated up even more.
We sold. So last year we did 30 million in sales. This year we're already at 40. I think.
Halfway through, not even halfway through.
We've added a couple of new agents that are significant producers. That's where those numbers are weird. They get kind of skewed because I'll have a new agent come in who sells a lot, so the production jumps. But that's kind of the point, you know.
Well, you're also doing some cool stuff from an investment standpoint, where you're allowing your investors to then take some of those commissions because they're making some big pops, right? They don't need all that disposable income and all the cash. So you're putting it kind of like into an escrow account, and then you guys are jointly investing into syndications and stuff, right?
Yeah, it's really cool.
So tell me a little bit about, like, how did you design that and how does that work?
Well, we had some friends that were syndicators, and they'd come to us and say, you know, we need an LP, here are the shares, this is what your minimum is. And a lot of my agents are really sharp. They work really hard. They just don't quite have the ability to cut a check.
It's a $100,000 check,
exactly.
Right? That's a lot of money.
Yeah, they just can't quite do it. They really like the idea of syndicating. They just can't get their foot in on it. So, and I'm not in a lot of them. I've got one closing any day now that I'll have 100 in that one as an LP. But we decided the agents can voluntarily have us withhold an additional amount of their commission, whether that's a flat amount. It could be $5, it could be like 20% extra of their commissions. We scoot that over into a savings account that's just an escrow account, and I just have to keep up with who contributed what, which is pretty difficult to keep up with. And then when a syndication comes along and we have enough resources, we throw it in the pot.
Is it based on when they put the money in? Do they start accruing interest?
No, not until we put it into the deal.
No, all right.
Yeah.
So, you know, if let's say there's 3 of us, I put money in January and it's let's call it $5,000. You put money in March and it's $10,000, and then Susie puts money in June and it's $2,000.
Right.
When that money gets deployed in July, does it matter how long the money's been in the account, or no?
Not really.
So it's really just who has what percentage of the escrow account at that time gets deployed into the deal.
Yep, and then as it comes back, it's a pretty nominal amount of money for most of us. I think there's like 5 of us that are in this particular one. So the agreement was like, well, and I've told them too, if you guys need the money, let me know, I'll pull it back out.
Yeah.
If it's before we've deployed it, I'll pull it back out and give it to you. It's no problem. Nobody's asked for that, but the really interesting thing about it is it's not very much that's dripping back in. So it's like, just leave it be. We'll just let that grow. It's just compound. All of it's going to compound quicker. We'll get into another one quicker and another one quicker, because it's not like a crazy amount of money that any of them need on a monthly basis. So as far as I know, there aren't really any other brokerages doing that. It's a pretty good deal. The one downside to it is the depreciation is really challenging to do in that regard. So really all they're getting...
Well, are you guys, I would assume that you're creating a new LLC, and you're taking 50 grand that's accumulated amongst all the different agents, putting it into this LLC, and funding the LLC 50 grand, and then you guys each have a certain percentage of that LLC?
Yeah, that's what we're doing next time. We should have done that. I called my CPA, I have an awesome CPA, and I was like, this is what we want to do. And I think he thought it was a little further out than it was. So fortunately, the agents they sell their real estate under LLCs, so they at least had that percentage there through an LLC. But going forward, we will set up a new entity,
a new special purpose entity, funded that entity then invests in the syndication, that entity then gets all the depreciation, and then based on your percentage ownership in the investing entity, then it just gets, it's a K1, it just gets flowed through to each one of you guys individually.
Yeah, and now I remember he was actually able to finagle everything so that we did get the depreciation, which was great. Because at first we were like, oh, he said early on that could be the case, just because of the way we structured it. But going forward, we know better now. So
that's cool, man. It's it's added value, right? It's you've created a network of people who, there's obviously demand, a little niche in the marketplace of people who don't want to have their license with a traditional brokerage because they're an investor and they're seen as the black sheep of the brokerage kind of a thing. And so like you've been able to create a culture there where people can come in, do their own deals, work remotely, they don't have overhead, they have a great split with you, they're keeping a majority of the money, and at the same time it gives them opportunities to invest passively in more syndication type deals.
Absolutely. And it's helped to bring all these different people together and keep it all really tight. So there's less confusion and less surprises with like outside agents.
How did you go through, let's talk about REI Central. So it's essentially like the local real estate investors association. why did you guys launch that? How did you make that decision to launch that? And what has that done for you to be seen as like an expert authority in the marketplace?
Yeah, it's been great. When I started investing here, and you may have remembered, there were a couple of RIAs locally. I was never a massive fan of just the way they were structured. I felt like it was more important that I pay my due and that I sign up for someone's coaching call when I went.
It was all pitches.
It was.
Right? It was all straight pitches. You sign up for and then they'd bring in the guru. The guru would pitch and sell, and then you'd have to go to that in order to get sold again and sold again. And that's what the RIA model is, though.
Yeah, and that's what it always used to be, too.
Right.
I think now technology's really kind of democratized things a lot more. So when I approached Kelly, Russ, and Dusty, who are my partners in that's Maven's one of the founding companies, and then their coaching company, which is Clear Vision Coaching. I approached them and said, like, let's make something that's more open platform, that's more democratic. And what we always say is that it's their group. Like, if you come in the door, it's your group. Yep. So you get out of it what you put into it. We're not going to hold your hand. You're paying $25 to come, or you can pay $100 to be here for the year. So we're not going to hold your hand and pull you over, you know, to make this work for you. You have to get what you want out of this event. And it's been great. They agreed. I mean, they both are a little bit older than me, so they've seen way more cycles of those things. But, you know, I kind of wanted to take almost like a Reddit approach where it's like, this is your platform, you know, you support the things you like and you ask us to sweep away the things you don't like. Yeah. And so far it's gone really well.
Yeah, I mean, it's a great connection resource. Of all the RIAs that I've been to and plugged into, like, there's people actually doing deals, right? Like, not just, you know, the 5% of the people standing in the back of the room, right? And all the newbies are sitting up front and getting sold on. Like, not like everybody's out there doing deals, or like at least actively making offers on things, you know what I mean? Like, or has money. And then I like how you guys break it up into kind of the different factions of asset classes and stuff too. Yeah. Hey, I want to sit with the wholesalers right now and see how they're sourcing deals. Like, I could go and sit over there, just get a few new strategies, tips, and techniques on how they're sourcing deals. Maybe be able to deploy that into my multifamily type stuff, you know. And then there's the flippers, and then there's the commercial side, or the buy and hold type folks. Yep. And so you guys are able to kind of break it up. Usually you have a speaker or something that comes in, and just, it's all value though. And that value, you know, people, I see a lot of people who, like, they want to run the organizations and just make short-term money. And dude, that's not how you create long-term wealth. Yeah, it's not.
And that's, like, how you keep people away when you do that. Yeah. You know, especially the new folks. You know, there really weren't groups either when I started. I approached Russ years ago, he ran a lunch mastermind and had to, like, beg them to let me in. And that's where I met him, Dusty, and Kelly, and quickly became, you know, they all three are mentors of mine. And fortunately, it was before they'd started their coaching company, so they couldn't charge me for it. So we just collaborated all the time, and I've been really pleased with the way that it works. We push JVs a lot right now too in there, because we've got all these new people that have the time and the energy more than anything else. And then we've got people who are desperate for deals, can't find them, but they got a lot of money. They got plenty of equity, they got HELOCs, they got all these things. So we're like, JV, put it together, even if you're not going to make it's. You know, what is Kelly always says is, like, 10% of a grape is better than 0% of a watermelon.
Yeah, where'd she get that from?
I have no idea, man. Upstate, a farm upstate somewhere, probably. So
no, it's 100%, dude. Like, it's better to do deals and share the wealth, and you know, it allows newbies to get into deals that they couldn't have gotten into. It allows seasoned people to get into deals that they maybe not have gotten into, and then all of a sudden, just everybody's making money. You keep partnering with the people that you like to partner with. You don't partner with the people that maybe things don't go as well. And dude, it's not to say that, like, a deal won't go well with a great partner, but, like, how do they act in that situation? How do they perform? Do they show up? Do they throw in the towel? Like, is it somebody that I can really, you know, get into the trenches with on the next deal? And you get to see how people operate. So, like, do deals, partner up, and it just creates more opportunities for everybody.
It does. And it's been great for us too, because so one reason we started it was we were being asked to go, surely this happens to you every day, get a coffee, let me pick your brain, let's go get lunch. We just couldn't do that. It was too time consuming to do that, especially when we were all doing it on our own time with sometimes the same person.
Yep.
I would get coffee with somebody today, and then they would ask Kelly for coffee tomorrow, but Russ got coffee with him yesterday. It just was silly. So we said, let's create this thing that's once a month, and hopefully we can bottleneck all this.
Yep.
We can get it done in a 2-hour time period a night. And it's been really good for all of us in being seen more as like a market authority. And a lot of markets get really sloppy on the investing front. We've been very fortunate here that it hasn't really happened. We all kind of know each other. We try not to gatekeep because that's sort of unfair, especially for new people who are learning. They might make mistakes, but it's just because they're new. But we try to kind of keep tabs on like making sure nothing super sketchy is going on, that there aren't bad eggs constantly ripping somebody off. So
I think when you go to one of those groups and there's a bunch of bad eggs in there, that's a reflection of the leadership, right? And when you have a bunch of quality people in the room, that's a reflection of the leadership. And you guys have good core values. You talk about it, you do business the right way. And so you just attract those people. If somebody who's a bad apple comes in, they get spun out pretty quickly because they feel uncomfortable being around all these people who do deals the right way, you know?
Well, a lot of it's ego too. I mean, we've seen a lot of guys that were like the big, you know, real leader, whatever, and it becomes more about them and the thing that they wrote and whatever, you know, the product they're pitching personally than the community. So we've been really fortunate with that it's the four of us and we take turns. Like it's tonight actually, and I'm not going because I'm supposed to be on vacation this week. So I told them like I'm not going to be there, you know, and nobody cares. They're cool with that. So somebody else will run the door, and I think Russ and Kelly are going to take turns hosting it tonight. I mean, that's
and the other benefit is that like you guys make your money from actually doing deals, right? Not from the education. So you don't have to, you don't get this like just greasy sales feeling whenever you go in there. And I think that's a big differentiator. And so like, you know, as people are watching this, I'm thinking like, it's so important to become the local, you know, expert, the local authority in your own market. And people can go and set up a meetup group or a Facebook group that gets together once a month, put some good people in a room, and just by putting other good people in the room and you organizing it, you get a lot of the credibility for bringing those rock stars into the room, even though those rock stars are the ones bringing the value. It's not you necessarily having to teach and coach and mentor. All you got to do is bring the right people into the room, and then you get the credibility for it, and it creates more opportunities for you. But I like the key is you got to keep on making deposits of value to other people, and you can't just go in thinking you can withdraw from a bank account that you never deposited into.
Exactly.
Right? Like you got to deposit. And then as the balance accrues of how much value you've given to everybody else, that's when it starts paying dividends and interest, and all of a sudden then you can start withdrawing and start doing deals and partnering and all that stuff. But like you got to have a long-term mindset. And really long-term is, dude, you can start doing deals in 90 days. You know what I mean?
Super quick. Yeah, I mean, especially if you go in, at, you know, I like that analogy about it being kind of financial, because if you don't put in and you go try to cash a check, it's just going to bounce.
Yeah, good luck.
Because you've not put in the time and energy. So, I mean, it's a different world community-wise now than it used to be. If you can go to a group like this and you can say, let me stuff your envelopes. I'll handwrite all your letters that we'll send out to find these off-market deals, and you get either X amount per envelope, or they pay you flat fee. Like you're basically working in the investment world by doing that, and you continue doing that stuff, and you get more and more responsibility from these individuals that are already making a living in that world, and they're going to bring you along with them. I mean, I've flipped quite a bit over the years. As the brokerage has grown, it's been difficult to flip because I just don't really have the time. So what we've been doing now is mostly just wholesaling stuff. So a kid came to one of our meetups, or May had reached out to me on Bigger Pockets or something, and I could just see in him, he's really smart, he's new to the area. He'll do a great job at this, he's just not yet familiar with the market. He had been doing a lot of wholesaling up in Winston-Salem, so I was like, I need you to come. He was getting his license as well, so I was like, if you got a license and you want to hang out with me, then I need someone to help me with acquisitions and operations. So he's just killing it. I mean, dude's getting off-market stuff. We just closed 8 single families on Friday. They're all under contract already to sell.
Close 8 to buy them.
We bought them Friday, didn't do anything to any of them, or we already have them all under contract to turn around and resell.
That's awesome.
Yeah.
What's the margin on that?
Pretty good.
Yeah.
It's, I think it's probably about a 11% margin on those, but we've done nothing.
You haven't done anything,
no.
Right?
So, and it's 8 individual single families. So, not the greatest. I mean, the plan with that always the backup plan with those are, let's get them on the MLS. We'll sell them a little bit below market value and get a retail buyer to get them. But if we can sell them to one of our investor friends at a deeper discount where everybody wins, that's even better. All 8 of those are being bought by investor friends of ours within our groups.
It's you know, you could fix it up, you could put it on the market, you could go through that whole hassle for 6 months and the renovations and the construction costs and dealing with a contractor and then a break-in and then the insurance and then all this other stuff and make maybe a little bit more money in 4-6 months. But then you have additional carrying costs, taxes, insurance, utilities, maintenance, management, all that stuff. Or you turn around, peel it off to somebody where you know it's going to close. You know, you're not waiting for some buyer to get their financing and line up their loan. Dude, know it's going to close, take a little bit less, move on to the next deal, move on to building wealth somewhere else. Just keep on churning it. You know what I mean?
I've loved those. It's great. And that's a temporary thing. I don't think that's going to last forever. It's this insane market that we're in. So we were like, you know, I don't have time to manage contractors right now. I have a hard enough time with renovations I have going on my buy and hold stuff. I can't take on more, you know, active, quick flips and things like that at the same time. So, you know, I'm giving him really that's the way I typically lead people anyways, is I give them a lot of authority. I give them tons of autonomy. They're agents of their own. They have their own free will, and I'll just check in, make sure everything's good. I'll clear executive decisions, things like that. But I want them to make their own decisions too as they go, because they're more invested in the success of it, you know.
I love it.
I didn't do any of this stuff to have an office job and have like immediate employees that have to come clock in and check in with me. I don't want to do that. I want everybody to have a lot of freedom, be happy, live their lives. He goes surfing essentially every day.
I think it's a cool way to, I mean, dude, if you want to build a big business, you got to leverage, right? You got to leverage other people's money, you got to leverage other people's time and other people's efforts. And so how do you leverage without taking on all that overhead? And we're talking like, hey, we don't want a lot of overhead, but like, how do you partner up with people and how can you leverage other people's? Well, you're doing a great job of it, of creating an environment where they can come in. If they work hard, they succeed, they make a bunch of money, and you succeed, you make a bunch of money. So you can leverage other people's efforts in that capacity without having to bring on all that overhead. And same thing with like the joint venture partnerships and partnering with people. Let me bring the money, you bring the deal, boom. And it's a way that you can kind of link arms, lean on other people's expertise, lean on other people's time to go and do that stuff and still get a piece of it and still be involved in the project. Well,
that particular buddy that's doing the acquisition stuff with me, it's really a JV. He doesn't like work for me, you know, so we net proceeds 50-50 across the board. He goes and drums up the deals. He does pretty much all the negotiating. I verify that our exit strategy is going to work and kind of figure out the best way to do it, and then get Kelly to finance them. So we sort of split the delegation that way, like up front, but then, you know, he gets reimbursed for his marketing costs. I get reimbursed for all the financing costs. Whatever our net ends up being, we split it. And that's similar to what we do with our agents, where it's a 90-10 split. You cap at some point because it's their business. You know, I'm always looking over their shoulders, making sure everything's good legally, compliance-wise, everything's fine. But I think people like that, they're investors because they want to succeed in their own terms, right? They don't want to get this like 9-to-5 job where they've got a pension, 401k, or they would have gone that way. They would have gone and gotten the 9-to-5 job. So I know that they've got the drive and desire to go do well. So I'm like, there you go. You've got all your resources. Go for it. And you'll cap at a point that's reasonable, and you're 100% commission after that. And so far, it's been great. They're more appreciative. They have a lot more pride in the company that they're in because they don't feel like they're being taken advantage of.
Exactly, man. And they'll stay forever. Where else do they get that kind of an opportunity? Right? Everybody else taking a lot more. That's awesome, man. So tell me, like, I know we were talking a little bit offline about this. We're in a hot market. And there's a lot of people who are watching this and who are going to be in a hot market. Or who are going to be watching this, who are in hot markets. Let's say at $1 million, access to $1 million, what would you go and buy with $1 million? How would you go and grow that as quickly as possible and turn that into, I don't know, $2 million, $3 million, whatever?
I would probably, if you're in an area where there is still a lot of gentrification that will happen, get as much as you can in that area. It might not cash flow great right off the rip. There might be a lot of management issues, but that's going to be engulfed pretty soon. You know, I think that that's a pretty easy one.
So right on the edge, buy stuff that's a little bit not all the way there. Maybe it's a C-class property in an area that it is about to turn into B, A-class type of an area, and buy it and what? Just let it cash flow?
Yeah, cash flow.
But just try to at least minimum break even where the cash flow covers your operating expenses, covers your debt service, and then in some of these really, really hot markets where you can expect, the K growth, then you don't want to speculate on it, but it's coming that way, and at least at the very least you're paying down principal on the loan, and the property's appreciating a little bit, bumping rents every year.
I mean, so two good examples, two properties that I'm selling right now are, I bought these houses, they were burrs that I got in a rough C-class area for, one I got for $65,000, put $30,000 in it and added a third bedroom to it, refinanced it at 97, got all my cash back, literally had a tenant in it for 1 year, my note's $97,000 on it right now. It will close in 3 days for $180,000 because of where it was, because it was a neighborhood that just sort of started to take off. And at the time, I even thought I was overpaying for it as I was going through that stuff. So it's cash flowed well. I rented it for $1,250. My note was $97, and I had kind of a hard money loan on it too, so it was pretty expensive. But it was cash flowing like $300 a month. Yeah. And sold it for almost twice what my loan was.
It's awesome.
So that's a lot of work, certainly. But I think that affordable-ish areas now, they're not going to be there.
You're looking for value-add type opportunities, though. So, like, I mean, you're not going to find something turnkey, really. That's a smoking deal. Like, so you got to be willing to get your hands dirty a little bit. I think a lot of people want this low-hanging fruit, and they just want to be able to go and throw money at it. It's going to be like, there's work that needs to go into it.
Absolutely. That's a big pet peeve of mine, honestly, is with, because I'm where I don't want to be, and I'm in the process of removing myself from the trenches. But most weeks I'll work probably 80-ish hours, like 6:30 a.m. Don't put my computer down until like 9. Granted, that's from home, so I can put my computer down and go hang out with my kid and do all those things. That's great. I've intentionally designed that kind of lifestyle. But I get really frustrated when new investors think this stuff's just going to happen. Yeah. I mean, you got to bust your ass. Yeah. You got to really,
especially early on, right? Especially early on, you got to put in the time, you got to put in the effort in order to compound the growth and the learning that has taken guys like us 10 years, to do. And yeah, it looks easy today, but that's because I put in the time. That's because I put in the 80-hour work weeks for a long time.
And you're going to mess up, and that's fine. Like, it's hard to hear when you're new, and it's like you're gonna lose money, but you're gonna make it back if you're consistent, if you keep working. I know losing $5,000 when you're young and new and you don't have any money sucks. It's really hard, but that stuff's gonna happen. So you're gonna have a loss over here. Hopefully you're gonna have 5 or 10 losses or wins simultaneously that are gonna make up the difference. And when you mess up, don't blame anybody. It's your business. You made the decisions to get yourself into this
100% ownership, man. 100% ownership. So going back to the $1 million thing, you got $1 million. Tell me.
If you don't need the immediate cash flow, let's say you're in a position where maybe you sold a family property and made the $1 million, go give that to a syndicator, put that in something that's easier, that's going to grow sort of on its own.
Love that.
It depends on what your needs are. That's what we tell everybody all the time with REI Central is like, people are like, they come in and they say, I want to be a house flipper. It says, that's only part of the equation here. Why? Like, what do you need? How much money do you want to make? What do you want your work-life balance to look like? Do you have any outstanding circumstances that are going to make your job flipping houses different from mine? And then you can figure it out from there. With money being as cheap as it is right now, you could leverage the hell out of that $1 million. You could go get a bunch of doors with that $1 million and use that as your equity piece. You certainly can do that too if you're in that acquisitional phase of your investing career.
I think we think as active operators, you're like, I need to go find a deal and to put this $1 million into. The reality is you can just find somebody who has a deal, right? Find the who has the deal, and then go and invest passively. And usually if you're swinging that big of a stick, like, you can get preferential terms. Hey, I'm gonna make your life a lot easier. You don't have to raise 50 grand from 20 people. You raise $1 million from me. Just give me a little bit extra equity or a kicker on the pref or something like that, and you can get some pretty decent terms on a deal like that. So I think that's a really, really great point that you make. Like, it's not you who has to go out and have the money and find the deal and operate the deal. What if you found somebody who is out there sourcing phenomenal deals.
Yeah.
And you either lend them the money, you joint venture with them, buy the deal from them, or whatever that looks like. But you know, you don't have to wear all the hats.
Yeah, and are you tired? Like, I've been just like you grinding for 10 years, and last year was the first year I looked at all my stuff and I was like, when should I try to retire? When should I be like, all right, I'm done grinding so hard? So if you're in a phase in your life where you don't need the active income, you don't need to maximize that $1 million, you want to lend that out at 6-8%, sure, then do that. That's so much easier than having to go put in the hours.
And dude, that covers some bills.
Hell yeah.
You know, like you can have a pretty decent lifestyle on that passively, you know, earning that plus some equity upside and whatever, refinances or sales. Like there's a lot of things that you can do, and it gets the money deployed. I think a lot of times, you know, guys we're comparing active returns. Well, what if I went and found the deal myself? I can make 22% on it. Well, and I'm only making 8% over here, or 10% or whatever. It's apples to oranges, not apples to apples. You know, so you gotta look at it and understand.
It's totally different.
If you can go make 22%, then go and deploy the money at 22%. Why aren't you doing that then?
Yeah,
right?
Oh,
well, it's because I can't find a deal and I don't want to do the work and da. All right, well then take the money and don't do the work and then just deploy it with somebody else. I think it's just, you know, understanding that. I think the wiser you get in business and the longer you've been around the block and you understand how much work goes into actively finding and sourcing and creating those opportunities, you respect that a little bit more, and you're like, hey, pay me my fixed return over here plus some equity upside on it, and let me be 100% hands off and have the lifestyle I want. You know,
I've seen you lately say, you know, I'll LP in that one. Because you can. I mean, and you are certainly busy enough with all these other things that you're like, well, that's a good deal. I don't have to be the dude that's doing it all. I can just get in on the track, you know, can hop on the train and benefit just like everybody else that's involved on it, you know. So I think just a good opportunity is a good opportunity too. That's what I tell a lot of my investor clients. They'll come at me with this very strict criteria of what they need to buy. They're like, has to be built before this year on a slab, you know, I'm like, then you're not buying a deal. You might get one deal this year, but a good deal is a good deal, regardless of what it is.
I'm a big believer in that. You know, baseball, like base hits win the ball game, not home runs, right? So like base hit after base hit after base hit, you will win. Not only because it's base hits, but it creates momentum, right? Like that's what gets everybody excited and the rally caps going, and like, dude, that's what really, that's what creates the win. So it's going out and just base hit after base hit and not having to wait for those grand slams and the home runs and swinging for the fences. And a lot of times those grand slams, dude, they turn into strikeouts too, you know, because you thought it was going to be something that it wasn't. And things change, right? And so
you whiff and you tear your rotator cuff.
Some of the home runs that I thought were going to be home were very heavy lifts, and we knew going into it that everything had to go perfect, or everything, it was going to be a lot of work, and then all of a sudden, you know, timelines get extended and construction costs go up and COVID hits and we can't find appliances anywhere or whatever. And dude, it's all of a sudden it incrementally increases, and that home run turns into still a good deal, but it's a base hit now, right? And so thankfully we bought it at the right basis. We created appreciation. We didn't speculate, and we bought for cash flow and a lot of these other ways of mitigating risk. But dude, it's definitely, I think it's more important to go out and do deals and create momentum than it is to try to find the perfect deal.
Yeah, I agree. We talk about that a lot too. It's just the velocity of it. So if you're hung up, you know, a lot of people come to me and they're like, I don't know who I should refinance this property with. Like, this one's cheaper, but this one's easier. I'm like, whoever's the quickest. If it'll cash flow and you're going to be in and out, getting it refinanced in 2-3 weeks, that's the way you're normally going to want to go. Because you just keep that ball rolling and rolling and rolling.
That's it. And it reduces the risk because it just gets done faster, and then you don't have to worry about political climate changing and all this other stuff. No, man, I'm a big believer in that. But dude, great conversation, man. I appreciate you. I'm excited for you know, you joining the mastermind. I think there's gonna be some really, really good stuff that we end up doing together because of that. I know you're looking at some deals. I'd love to partner up, bring money, do whatever we can do.
I want more. I want bigger assets and to grind a little bit less. You know, if I can put more energy into a bigger accumulation of doors over here instead of brokering. You know, brokering's been really good to me, but it's a lot of work to be showing houses and negotiating contracts and all those things. So I'm trying to back out of that a little bit more and trying to leverage my small single families into bigger assets actively. So
oh man, I mean, you're in a great position to do it. You've laid the groundwork over the past several years. You're the authority in the marketplace, and dude, you've done a lot of things over the past 7 years. I can't imagine what the next 7 look like.
Yeah, excited. It's gonna be cool to see it.
Appreciate you, dude.
Thanks for doing this, and thanks for letting us into the group.
That's it, brother.
We're happy to be there.
Appreciate you, man.
Cool, man.
Awesome. I hope you guys got a ton of value out of that. Like, he's just filled with a lot of wisdom, right? He's a young guy, but understands the marketplace, looks at data, looks at analytics, looks at behaviors in the marketplace, and is able to kind of identify where the opportunities are. So appreciate him. He's a great dude. I'm really, really excited for all the things that he's going to be accomplishing over the course of the next several years of being in this business, and all the groundwork and the foundations that he's laid already. So definitely somebody you got to connect with, and make sure you're following him. If you're in Charleston, plug into the real estate or the local event that he holds. It's the Charleston REI Central, and so I think they meet about once a month, and there's a lot of players that come out to that. So appreciate you. If you got a lot of value out of this, please share it, like it, subscribe, hit the notifications bell, and share this with somebody else who would get a ton of value out of it too. So appreciate you, love you. Until next time on Spill the Beans, I'll see ya.